Alrighty, guys. Hopefully everybody's had a good day today. It is Thursday, June 22nd. We took a couple trades on the live, and then I actually took two trades in the afternoon session that I alerted. One of them ended up getting stopped out, and then the next one ended up we re-entered the exact same trade, and then it ended up playing out. Beautiful, beautiful trade. Great move. It made me up a lot on the day. So we're going to talk about that, and then we're going to talk about the other trades as well. So first thing, jumping in, right? What was our bias going into today? How did it change? So number one, just want to take a look at mostly ES here for now. So going into the day on ES, I did have a kind of mixed bias, and my biggest bias was going to be, my true bias. I really wanted to see how price action started to play out in the morning. And the reason is because, we have a clear downtrend. We're still selling off, but ES has now swept this low, right? So sell side on a bigger time frame has now been swept. Now I was, possibly expecting that this daily fair value gap was going to be the draw on liquidity, and I still would want to see this get touched back into. So I still think that this is the draw. I still would want to see this get lower, or possibly even come up to this daily fair value gap, then reject, then go lower. We'll talk about that later. But right now, since we opened up, right? We opened, sell side being swept. I wanted to see the reaction at the open, meaning, are we going to start selling off at the open? Are we going to, bounce up to the open? A lot of the price action in my bias starts to form when I can see, what kind of action starts to show and present itself right when opening bell happens. So going into the day, I ended up taking a trade on NQ pre-market. And I'll talk about that. I was in very low size. I was just testing strategy, right? I did not alert it because for me, it was just kind of a test on what I believe the draw on liquidity was. So we'll talk about that here. The trade I entered was right here. I'll talk about why I entered this. So going into the morning, looking at NQ here, right? I have a mixed bias. So there's two things I want to see. Number one, looking at the 5-minute chart, we have two things that pop out to me. We have equal highs above us and equal lows below us, right? Big things, right? If you're new here, we know equal highs, equal lows, going to be areas that act as a magnet, right? Those are going to be areas we like to, gravitate towards. Heavy liquidity areas, right? Resting orders. That is where we're most likely going to see price get, why am I blanking? Just that's where, it's gonna, we like to say equal highs, equal lows act as a magnet. So going into the morning, I have confidence that the draw on liquidity is these equal lows here, right? That's probably what we're going to end up sweeping. Once we see we come up, we form equal highs here, and we start to see displacement back down. Once we continue lower and we break that previous low and can, break through it with displacement, and we get close to this, I know that we're probably going to break these equal lows, right? This is now going to become whatever the draw is. Also noticing, again, we've had a clear downtrend. I think the draw on liquidity is that daily fair value gap. So I see a 1-minute fair value gap here. I have confidence in the draw. We have strong selling pressure. And I was just looking for a quick little scalp here. So I waited for that 1-minute fair value gap to form, waited for that re-entry, looked for the pullback, entered in short, stop above the wick of the fair value gap, and then I ended up entering. And then right when the market opened, we got a boom, big candle down, and my price target ended up getting hit right there. So after that happened, again, what can we expect now? Notice what happens here. Notice what happens when equal lows get swept. There is no follow through here. We sweep this level and then instantly get bought back up. So that becomes our market structure shift, right? Big displacement back to the upside. Now, it doesn't matter if I mark it in here. It doesn't matter if I mark in market structure shift here or here or here. It doesn't matter because I know just by looking at the displacement, right? Now, just from experience, right? All I need to see is this two massive candles to the upside, knowing these equal highs above us now become the draw on liquidity, right? This is where we want to go. This is where price wants to head. So what do I wait for? Some sort of fair value gap. One minute fair value gap opens up. Wait for the pullback. Enter in long. Targeting equal highs. Beautiful push to the upside. That's how we do it. That was a nice way to start the morning. Pull back to fair value gap, targeting that draw on liquidity. Nice little scalp. After we sweep this, now the reason I did not leave a runner, right? The reason I didn't leave a runner, I ended up taking off my full position at these equal highs. And the reason is because on a bigger time frame, I don't know if we're going to sweep this, right? Because in my mind, I still want to see us come down to this daily fair value gap. I'm not expecting to see, a big push like this, right? We're still really bearish. I still think the draw on liquidity is lower. So when I see these equal highs, I'm possibly maybe expecting a sweep and then maybe a pushback lower. So a lot of the times when I have confidence in a specific move, not maybe an after move, right? Which this being the after move, I just will take it off what I'm confident, right? And that's all you need. This is all I need. I only need to catch this move to make, change my entire life. You only need to catch this move to change your life. I do not need to catch this entire move. Now, again, a lot of people are going to, it's funny because so many people come to me and they're like, dude, you caught like 10 points, or like you caught like 5 points, you caught like 10 points. Yeah, because I can do it consistently. The way that I like to look about the market and the way that I trade is scalping is the best way to trade, in my opinion. And the reason is you can consistently find a 5 point to 10 point trade every single day. You're not going to find this trade every single day. You are not going to find this move every single day. It's not going to happen. You're not going to catch this kind of move. And if you go into every single day trying to catch this move, you're going to fail. It's just simply how it is. But we know we can get this move every single day. We know we can. So take advantage of that, right? Again, the beauty about trading is it's infinitely scalable. You can scale it infinitely, right? Meaning we can all catch this the same move and I could make $1 million just on this move, just from using leverage, right? It's all capital. It's the exact same thing, right? That's the beauty of trading. So do not focus on, yeah, exactly. Just got to get on base. No home runs. You do not need to catch an entire trend day move. Stop focusing on making home runs. Stop focusing on making massive wins. All you need is to master this 10 handle moves, 5 to 10 handles. That's it. That's all you need. Okay. So the rest of the day, once we sweep this, I'm looking to see if we continue higher, if we reject back down, right? So looking at the 5 minute, looks like we continue higher, right? Massive push to the upside. Now, the next thing I'm waiting for is I'm looking at this 1 hour here. And I'm looking at this 1 hour fair value gap that we have. Now, what can I expect? This. So in the live session, when we were talking about this, I said that I'm still bearish, but if we can break above this fair value gap here, this 1 hour fair value gap, and hold above this and possibly retest it, then I have confidence that the draw on liquidity is going to be that recent buy side level, being that 15-minute, 1 hour, whatever, this high here. Notice we came up, initially rejected it a little bit. Actually, we didn't at all, actually, to be honest. Look how perfect this plays out. This is an inverse fair value gap, right? 1 hour, inverse fair value gap. This is the way that I like to use inverse fair value gaps to give me a better understanding and bias to what the draw on liquidity is. If I'm bearish, or if I'm bullish, or if, in any sense, anyway, looking at this chart, if I'm bearish, I would want to see this, right? Come up to this 1 hour fair value gap, instantly reject, go lower. But that's not the case in this scenario. We end up going right through this level, right? So that's telling me, okay, my bearish bias might be a little bit off here and I have to reevaluate, right? Trading is one of those jobs where you're constantly being fed data. You're constantly being fed information. Take advantage of that, right? Use that. Do not be afraid to switch your bias when you see new things, right? That's the whole goal as a trader. You have to be able to adapt to new information. So notice NQ comes up, puts in this high, forms equal highs. Notice we never sweep this level. So this big move to the downside ended up faking out a lot of you guys, right? This move to the downside ended up faking out a lot of you guys. I bet a lot of you guys maybe were taking shorts here, maybe shorts in this fair value gap because you're expecting to see lower. Notice we have not swept that level yet. And notice where we're retracing back into that inverse 1 hour fair value gap. Again, if we're bullish, we've broken this bearish fair value gap. We're showing that bears are not as strong as we might have thought. We've broken through. What happens when we come back to it? Boom. Not a single candle close below, starts to chop, starts to consolidate, and then a big move back up to then take out buy side level. So let's talk about that next trade we took. And this one ended up getting stopped out. Now, I'm okay taking this trade. I took very light size on this trade because it was silver bullet. This was actually my first loss of the week. It was like I'm not exactly sure what this loss was, but it meant nothing compared to the wins that this day. But this was our silver bullet trade. So silver bullet model, right? We know macro runs 10 to 11. Noticing the exact time, if we look at the timestamp here, 10 o'clock in the morning, opened right here, 10 a.m. EST. We know silver bullet is going to be whatever that first fair value gap that gets reached into, targeting the opposing liquidity pool. We know the opposing liquidity pool is this high up here, and whatever that recent high is here. Wait for that pullback to that fair value gap. I entered in long, put my stop at the bottom of that previous wick, and then I ended up getting tick stopped here, and then ended up missing out on that big move to the upside. Again, happens. Part of trading. You cannot get frustrated. You can't get flustered by this. It happens. What we should be focusing on is, did we follow our rules? Did we follow good risk management? Were we over leveraged? Were we not over leveraged, right? Were we using proper position sizing? And for me, I did not break any of my rules here. I followed everything. I went in low size. I had a tight stop loss, and I followed that stop loss. That means I'm okay missing out on this move, right? Because I know in the long run, I'm building good habits. Those good habits are going to come back to reward me in the future, right? So don't be shaken up by moves like this. Tight little stop out. Nice little 9-pointer. So next trade I ended up taking, I alerted in the Discord. This was after. So we ended up ending the live session, letting the market sort of do its thing. I was up around, I think I was up like 1K at this point. I was up, I think 1,500 off this first trade. And then I took like a $400, $500 loss right here. And then ended up being around up 1,000 after that. Next trade I ended up taking was this right here. Now, a lot of people were a little bit confused on this, or not a lot of people, but I saw somebody who took a little premature trade. And I think what they ended up taking was this right here. I think somebody took this trade right here. Now, the reason why this is a bad trade, why is this less probable than this one right here? Well, looking at this trade, the reason I would not enter here is we have to notice structure, right? Now we're pulling back into a fair value gap, right? That's good. But notice where we are on the chart, right? Where do we want to see us retrace to? Discount, right? We want to see us retrace to discount. If I put in my fib here, go from the high to the low, we have not yet reached discount in that first area, right? I want to wait for the reaction, right? I'm not trying to predict. I don't want to come in this fair value gap and then look and then automatically enter and expect us to bounce. I want to see a bounce first, an internal market structure shift, and then look for an entry, right? Because I have a clear draw on liquidity still being higher. We've had a big push down, bounced off that 1 hour inverse fair value gap, big push back up, pull back to discount now. Notice where we tick this to the exact fucking tick. We retrace, hit 50% discount to the exact tip. Then I see the displacement, right? Then we get that bounce. Boom. Big move to the upside. What am I looking for? A fair value gap. There it is. 1 minute fair value gap forms. Wait for the pullback into this. Boom. Gets touched in. I go long. Let me move this. This was not the fills round. There we go. A little more accurate. Gets touched in. Enter in long off that fair value gap. Once I get that displacement, right? I'm not entering here. I'm waiting to see that internal market structure shift, right? That wick gets broken. Big volume. Fair value gap gets created. Wait for that pullback. Enter long. Targeting clear buy side above us. Hey, this is an A+ setup right here. This is a confident trade. And this is what we also want to notice right here. What is this now? This now becomes low resistance liquidity run. Now, if you're new, I'm probably throwing out a bunch of fucking terms at you, and you're like, what is this guy talking about? He's jambling on, right? That looks like a bull flag to me. I mean, it technically is, but the way that we like, this is a more accurate representation of what's actually happening here, right? Now, when we talk about a low resistance liquidity run, we are basically saying that notice that when we trade off liquidity, right, we want to trade off of external levels. That is what's going to be prioritized. That's what's going to be hunted, right? Like this high and this previous 15-minute high. When we're looking at all of these little highs right here, this becomes low resistance, meaning we're not going to come up, sweep these highs, and then go back down. If we break one of these highs, we are going to break all of these highs. We are going to break all of these highs. So this is what we call low resistance liquidity run. So took that trade, another great scalp. Now, this is the really big trade that we ended up taking, and we'll talk about the first trade ended up getting stopped, and then the next trade we ended up getting in, re-entering on the same trade, and then finally ended up getting hit. So we'll talk about this. Looking at the 15-minute first. So what happens after we sweep this high here? I'm no longer bullish. I am no longer bullish once we sweep this high until I get more structure, right? Now, we could absolutely just go straight through this level if we wanted to, right? Market can do whatever it want. We could have just trended higher without even doing. You can see we've been, trending up afterwards in the at the end of the day. But even if we didn't get this displacement back down, we could have still went higher, right? That's why we wait. Once we get displacement back inside of this range, what do I want to see? Pull back to discounted fair value gap, targeting whatever the recent sell side level is. And at this case, it's this low here, right? Whatever that low is created from that move to the takeout sell side. So looking at ES and NQ, at this specific time, we can see we're forming SMT. NQ has a high put in. ES is forming lower high. NQ comes up, sweeps that external level, forming higher high, right? That's bearish. What do I want to see now happen? I want to see displacement back down. Notice NQ, big selling pressure back inside this range. This is what we want to see. That's what we want to see. I don't want to see a little poke, then look to maybe take a short. I want to see big displacement back in the range that tells you, right? This is going to show you. This is what we want to see right here. Big displacement back down. So what did I wait for? Right here, I entered in a little bit prematurely, and I'll talk about why this was a bad entry. So my bias at the time, again, still same bias, right? I still want to enter a short position, which, that's correct. But this is what I was paying attention to, and the reason why this was bad. So I saw that we were in this 5-minute fair value gap, and this is what I was looking to take an entry off of, right? Looking at this 5-minute. Going back to the 1 minute here, you can see once I saw that we rejected this level, right? Because this is the top or this enter into that 5-minute fair value gap. Once I saw that we rejected this, right? Big candle back down. This gave me kind of a sign that we're like, okay, now I think we're going to go lower, right? We've rejected that 5-minute fair value gap. I'm going to wait for that 1 minute now to get traded back into, which it did here. And I entered short, put my stop at the high, and I ended up getting stopped out. Why do you guys think I got stopped out here? What do you guys think? I'm going to take some time. Let me know what you guys think. Yep. No discount, right? If I was to draw a fib in here, right? Looking at a 2 minute here as well, we have a clear fair value gap up here. If I was to draw a fib from that high to the low, right? The recent leg move, look where discount lies. We never traded back into discount in this initial entry. But what happens right when we do trade back into discount? Instant sell off, back down. So this is actually a thing I really want to talk about, because a lot of traders, this is something we want to learn how to have confidence with, right? We want to have confidence with this. Being able to get stopped out of a trade and still have confidence in your bias to re-enter, right? Understand what you did wrong and then be like, okay, I was a little bit premature on this trade, but now, everything's starting to play out even more in my bias. I'm going to re-enter this because I still think that the bias works. A lot of people are a little bit afraid to do that, but you don't want to just keep entering trades. You need pure confidence, right? You have to have conviction, actually a reason to enter. So we end up forming another SMT now. ES ends up coming up, sweeping this high, right? Forming higher high. NQ puts up, never ends up sweeping this high, forming lower high. Now we have another bearish SMT starting to form. Now, I didn't even wait for a fair value gap at this point. Right when I saw this rejection, I jumped in shorts because I knew that I was wrong on that first entry, and I knew that this trade I had confidence with. Right when we rejected, entered in short. Now, you could have waited for that fair value gap, right? We got that 1 minute fair value gap right here. You could have waited for the pullback, entered short, stop. I put my stop at the previous wick. I was actually very close to getting stopped out. I put it at the wick. I was a little bit tight on the stop loss. Probably should have put it somewhere up here, but I did put it at the top of that wick. End up still rejecting that 5 minute fair value gap, right? If we go back on a bigger time frame, still rejecting this 5 minute fair value gap, right? Look at this candle. This is what we like to see. Notice not a single candle closes inside of this fair value gap. Instant rejection. Notice all the wicks do the damage, right? What we like to say, wicks do the damage, candles show the narrative, right? That's what we like to talk about. So start selling off, right? Enter in short, SMT. This is a clear sell model to us, right? We have external liquidity swept, SMT at the highs, displacement back down, pull back to discount, another SMT, wait for the rejection, enter short, targeting opposing liquidity. Boom, A plus trade, right? So we come down, retrace back into that 2-minute fair value gap, and then we get a massive sell off to that sell side level. And I take off all my contracts when we get down here. So that was the last trade we ended up taking. And I am very happy with ending the day on that trade. Again, being able to get stopped out in this, right? And then end up taking advantage of this big move, right? Look at this stop loss. How many points is this? 10.5. We'll say it's just 11. 11-point stop, right? On NQ. 11-point stop on NQ. What's our wins look like? 41. 4 times, almost 4 times our wins compared to our losses. That is how we want to trade. Now, a lot of traders, and I think a lot of people that were in this trade as well, I saw somebody being like, oh, you know, I sold too early. The more that you start to gain confidence with how we trade based off liquidity, the whole guessing game of, oh, is it going to bounce here? Is it going to bounce? Should I scale here? Should I scale here? That becomes off the fucking table. You know where price is going to go. You know where it's going to go. So why would you take off any sort of position before that gets there, right? Take advantage of what you're confident with, right? Take advantage of what you're confident with. Would I scale here? No. Why would I scale here? To take some off? Yeah, it's always good. You know the saying in trading, you don't go broke taking profits. Yes, you fucking do. You absolutely can go broke taking profits. Absolutely. And the reason is because if you're taking profits way too soon, that means your losers are always going to outweigh your winners. Always. Being able to let your winners run like this with confidence. I have no desire to take off any sort of trade until we get to that external level that I know we're going to take, right? Now, the only valid take profit that you could take would be this low, right? You could maybe scale a couple here, but other than that, you should not scale anything before this level gets met. Have confidence. Let your winners run. Your minimum RR in this trade should be 4. That's it. Minimum RR in this trade should be 4. Exactly. You go broke taking profits when you screw up your RR. So being able to stay patient, right? We know what the draw is. We know what draw and liquidity means. It's a draw. It'll act as a magnet. We know price is going there. If we need to go higher, right? We know if price wants to go higher, we need to take some sort of sell side, right? Notice if to see this move, we have to come down and sweep some sort of low first, most of the time, especially when we get this kind of displacement, right? We know markets move in waves. Come up, take buy side, displacement back down. Where do you think we're going to go? Sell side. Okay, come down, take sell side. Where are you thinking to go? Buy side. Boom, right? When you have these things in mind and you have confidence with the draw, you can take advantage of these kind of moves. The way that the thing that I love about my style of trading is when I'm wrong, you find out pretty quick. If I get stopped and I'm wrong, you'll find out very, very quick. I don't have to sit there through 30 minutes, an hour, a day to finally figure out I'm wrong. If I'm wrong, I'm out. And I understand that. But if I'm right, most of the time, my RR and my entries are going to be close to perfect. Little to no drawdown. That is the best way that we can learn how to trade, right? When we have confidence with those entries, sniper, perfection, right? That is what we're focused on, mastery of the craft. When we're focused on making money, you're going to lose because you're scared to lose money. You're focused on making money. You're not thinking about the charts. You're thinking about cash, and it's going to sway your bias one way instead of taking in the information in front of you. We are focused on sharpening our sword, mastery of this craft. That is what is true value. That is what's going to provide value to your life. So those were the trades that we took today. Let's talk about what we're going to be looking at going into tomorrow. Let me clear up the charts a little bit. Now that we've talked about this, going to take all this stuff off, right? We're going to go into a new day, fresh chart, clean. Delete all this shit spam. Clear up ES a bit as well. Actually, I do want to keep that fair value gap on, right? That inverse fair value gap. What do you think that's going to do? All right. So let's take a look at just ES here going into tomorrow. What do you guys think my bias is going into tomorrow? Do you think I'm going to be more long biased or more short biased? Long, short, long, short. Okay. So we got more longs and shorts. Now, going into tomorrow, I am going to be more long biased. Now, let's talk about why. Looking at ES first, what do I want to pay attention to? Well, I want to look at daily first, possibly go down to lower time frames as well. Number one, looking at the daily, what do we have up here? Another daily fair value gap. So we don't not only have one below us, but we have one above us now as well. Okay. First thing I want to mark out. Next thing, looking at this 4 hour, what do we see? Clear sell side level, get swept, big displacement back to the upside. Looking at the 1 hour, what do we see? Bearish PD arrays getting disrespected, right? If we're bearish, we want to see this fair value gap get rejected and then go lower, right? We want to see this and then this, but we didn't do that. We broke right through it. So what can I expect? Inverse fair value gap, come back to this, potentially see higher now. What does all of this action to the left look like to you guys? Notice we have a high here. We got a high here. Got a high here. Got a high here. Got a guy here. Where's buy side resting, huh? Where's buy side? This is clear lower resistance liquidity run to me. There is no significant high here that wants to get targeted. So what happens? They all get targeted. If we break one, we break all. So going into tomorrow, I could honestly expect to see possibly a big run up. Now, I do believe going into tomorrow, I would want, now again, a lot of my bias, my bias might change depending if I wake up tomorrow and I see the overnight session, right? If I wake up tomorrow and I see the overnight session, I'm like, oh fuck, we sold off back through this, maybe it withdraws lower, then I can always change my bias, right? Because I have more context, I have more data. But right now, I do believe that I want the draw to be that daily fair value gap, right? We know those fair value gaps are going to get traded into. If we're looking at this chart, we know we've swept sell side, displacement up. We're breaking bearish PD arrays. We have a clear low resistance liquidity run past, structure to the left of us. We have a daily fair value gap above us. We know that we're probably going to retrace back to discount. Where do you think discount lies? In that fair value gap, most likely. Boom. This is where I think we are going. All right, let's take a look at NQ. Take a look at those bigger time frames first. All right. So the only thing that I want to be cautious about, the only thing that I'm a little bit cautious about still, which could become somewhere that we might retrace back into later, right, in future structure, but we still have this daily fair value gap that has not been traded into, right? We actually formed relative equal lows with this. But again, same thing with ES here, looking at the 1 hour. What does this now become? Sweep of sell side level. We sweep these lows here. Big displacement back to the upside. Market structure shift. Clear displacement through this level. Looking at the 4 hour, where could we potentially see us retrace to? Have this bullish fair value gap. Marking our fib. Where do you think this lies? Possible discount. Notice as well, we have a 4 hour fair value gap here. So we'll see if we break through this. Do we have a 1 hour? We all do have a 1 hour as well here. So actually, we don't even have to possibly go to discount here. We could come back into this fair value gap here and then potentially see higher. So I'm going to mark this in here being 1 hour inverse fair value gap. As well as we have this one down here, but I want to more watch this one. So same bias going into tomorrow on NQ. I do want these highs to get met, right? We have kind of a relative equal highs stacked up here, as well as this imbalance on the 1 hour that has not been traded into yet. So I would like to see potentially retrace, look to see some sort of short-term buy model get formed down here. Wait to see that displacement, right? That confirmation to buy back, and then look to take out that recent high and then possibly let those runners go to that buy side level, right? Does anybody have any questions? When do you choose to trade NQ versus ES? It depends. It depends on which one has the cleaner action. If I'm bearish, I have to understand which one's weaker, which one's stronger, right? It depends. And I can't tell you unless it's, in the exact moment when I can look at them. It'll always be different. Was this entry okay? Let me check. Let's see here. Oh. Okay. Oh, that's okay. I'm guessing your stop was at that recent low. Yeah, I mean, that's not bad. It's not a bad trade at all. You have good confluence. You have a pullback to discount on a bigger time frame. You have a bigger time frame PD array. You have an SMT at the lows. You wait for a pullback to a discounted fair value gap. You get a market structure shift on a smaller time frame. Wait for a pullback to the discounted PD array. Buy up. Not a bad trade at all, brother. Did you say that you should look for discount if there are 2 or more fair value gaps, then you know which one to base your entry off of? Yes, but it does depend on the specific moment. But most of the time, yes. If we're looking at like a 1 minute chart and we have 2 fair value gaps created, you want to take the one in discount. Would you have taken this short? I would want a little bit more context, to be honest, on a bigger time frame. I want to know like what bigger time frame structure looks like. But probably not. Again, it depends, but probably not. How do you determine which sell side TP on the last trade? It's whatever that recent low is, right? So if we're looking at, we'll go back to the 1 minute here. When NQ comes up and sweeps this level, right? What's the most recent low after sweeping this level? This is what we call low-hanging fruit. Low-hanging fruit, meaning this is the level that you have pure confidence in. We know, right? This is pure confidence right here. We know this is going to get taken. Now, these is where your runners go. If you want to leave a runner, the next whatever low, that significant low, right? That's where you leave a runner. You set yourself to break even, right? Because the day that there's going to be times where that will hit. But this is what we like to call low-hanging fruit, which is whatever that first low or first, high was. Does that make sense? Do you have a video explaining all the acronyms you use in your strategy? I am decently new to trading, and a lot of these terms are foreign to me. I don't have one video, like I don't have a single video talking about all the terms. But I actually, that sounds like a good idea. I might end up making a video on that. I recommend watching a lot of my videos, and a lot of the things that I talk about, you'll just start to pick up on. And if you want to learn more about the specific concepts that we trade, you can watch ICT videos as well. You said it to take the fair value gap at discount, but the discount is on a 4 hour, not the 1 hour though. 4 hour. So in this specific case, when we have market structure shift like this, we could see discount, right? But I'm drawing in both of these again. I don't care what the market again. The market could do whatever it wants. We could come into inverse and then bounce and go buy side, or we could come down to discount and then bounce and go buy side, right? But right now, again, it's not with this. Let the market do its thing, right? We could go either one here. I want to wait to see what happens if we go in. I want to see, okay, we're going into the first one. Do we get a bounce? Oh, we don't get a bounce. Okay, we're going into the second one. Do we get a bounce? Oh, we got a bounce. All right, let's look for a buy model, right? That's the way that you need to think about the market. You should not give a fuck. You should not give a single fuck what the market does unless you're looking to take some sort of trade. And when the market looks like this, we're not close to taking any sort of trade. I know on a bigger time frame when opportunity is going to present itself, just from experience. I know how much probable time there's going to be. Looking at this trade, right? Okay, we're, 3 candles up. This is a 4-hour chart. That means, this many hours went by. We have to probably retrace back into this. That's probably not going to happen in one single candle. So it's probably going to be another 8 hours, right? So when we actually get there, okay, then now I can go down to a 1 hour. Okay, I can go down to a 30-minute. Maybe some more structure needs to form. All right, maybe let's wait another day, maybe, later in the day. Okay, now we have some 15-minute structure. All right, we just swept that low. Now we're getting displacement on a bigger time frame. All right, now let's zoom even more. That is how you perfect a fucking gold entry. That is how you it looks like wizardry when I do this shit. It's because every single thing lines up, and then I zoom in, and then I wait for that time frame to line up. Okay, and then I zoom in again, and then I wait for that time frame to line up. Okay, and then I zoom in again, and then I fucking snipe. Does that make sense? I'm hoping that makes sense. Could you consider that we retraced a discount of the current leg of price on the 50-minute because we were forming a bear SMT and then go higher to take lower? Wait. Oh, just in okay. I have a question unrelated to the charts. In your opinion, does risking $100 per trade on a 25K funded account with 150 on to make sense? Fitting consecutive trades lose? Yeah, absolutely. Yeah, 100%. Yeah, 100 is not bad. Yeah, I'd recommend doing that. Again, you could possibly up it in the future if you start getting that confidence, maybe to 200. But 100 is definitely a good start for sure. Let's fucking do this. Yeah, made hella sense. Dope. Do you happen to know if I can export my trade data from NinjaTrader? You should. It should be a CVC file. I think it's a CVC file. Any news tomorrow? We have 9:45 news, but it shouldn't do much. We do have news, yeah, 9:45, but shouldn't it's just PMI. So a lot of the times we'll just wait for that, see what happens. All right. Next segment, last segment of this charting session. This one's going to be, again, we've been going for 45 minutes already, but I do want to talk about this one last thing. And I am going to whip out fucking MS Paint for this one. All right. So I do want to talk about a little bit of some more specific stuff. Because this sort of happened today a little bit for me. And I know it happened many times to me in my past as well. And I know it happens to a lot of you guys as well. So I want to cover it. And that is specifically talking about the journey of emotions that can happen in just one day, right? So we're going to mark out a little thing here. Little timeline. Boom. See a little color here. Boom. Market opens, right? We're talking about psychology right now, guys. Get more getting that headspace. All right. So market opens, right? Let's take today, for example. We ended up getting a trade less than 10 minutes into the market, and it was a winning trade. Market opens here. 10 minutes in. Up $1,000. 10 minutes in, I'm up $1,000. All right. Okay. So now, okay, well, how am I thinking? I'm like, let's go. I just made $1,000. Market just opened though. So I'm gonna keep watching, right? I'm gonna keep watching. It's only been 10 minutes, even though I'm up 1,000, right? It's only been 10 minutes. I might as well, sit here and then, keep trading. So another time goes by. Let's say later in the day, whatever time it is, I take another trade, end up getting stopped out. It's an okay loss, but I gave back some profit. Let's say I'm up 500 now. So I gave back half my profit, right? Oh, yeah. What the hell? Give me that brush. There we go. So I'm up 500, right? So we gave back 500. My mindset, right? I bet this is, tell me if I'm correct, right? When you think about this. Now, you're not actually saying this to yourself, but psychologically, when this is happening, all you're thinking about is, fuck, I was just up $1,000. Now I'm up $500. That means I just lost 500. I do not want to end the day. You want to get back to where you were, right? You want to somehow get back to where you were because you were up 1,000. Now you're at 500 and your mindset starts to shift. Even though you're up, it's not good enough for you, right? It's not good enough. You're like, why the fuck did I do this? I just gave back my profit. So you go into the mindset. You switch, your head automatically switches and you can't control it. And you automatically need to find some sort of trade. You just start looking harder. Like you don't notice it, but you're psychologically looking for something because you want to make that money back. You don't want to end the day, right? You were up 1,000. You just gave that back, right? It's very hard. It's very hard for people to step away at this point in time. It is very, very, very hard for people to step away at this point in time. And that is what we want to work towards. So let's say next thing happens, you take another trade because now you're in the mindset of making that money back. You're not focused on taking good trades anymore. You're focused on making that money back, right? So you find some bad trade, you're looking at just a single fair value gap, no context. You're like, oh, this looks good. This looks good. You're trying to convince yourself that it's a good setup when it's not. You take another trade and now you're down. Let's say 200, right? Not even that bad. Not even, you're up 1,000, but now you're down 200. So now you're like, now you start getting mad at yourself. You're like, what the fuck are you doing? You're breaking. I shouldn't have taken that trade. And then that starts of sense starts to hit in right now after you lose. Then that smart, that sense starts to come in and you're like, what the fuck did I just do? Right? Why did I just fucking do that? When, just 5 minutes ago, you had the complete opposite mindset. You were like, oh, this trade looks good. You're convincing yourself looks good. And then 5 minutes later, you're like, dude, that trade was fucking ass. Why did I take that? Right? So that just shows you how powerful and how your mind plays games on you and sets you up for failure, right? That is why emotion is one of the biggest fucking shit that'll bring you down in emotion or in trading. Psychology is 90% of trading, and understanding that and how to control that is the biggest thing. So I like providing these specific examples because I know almost every single one of you has been through these emotions. So it's good to talk about them, how to deal with them, right? Your mind plays tricks on you when you're trading, right? You don't understand that when you start getting in the mindset that trading is just purely a system and cash is not an object in your favor, right? You stop. You have to disconnect yourself from the money. You're not afraid to lose anything in this point. All you're doing is waiting for something that is repeatable, that works for you. You have experience with it. You're consistent with it. And you have that system that is repeatable every day. You don't go into every day looking for something new. You know what you're looking for. And if what you're looking for doesn't appear, you don't take a trade. It is that simple. If you can't do that, you will fail. You have to be able to go into the market, wait for what you're looking for. When you see it, you execute. But if there's nothing there, you do nothing. So when you get days like this, where you get that negative 200 after, you have a big win and then two small losses, you go red. That's when this hits you, right? Being able to just say, you know what? Why the fuck did I do that? You go from, convincing yourself something's, insane to realizing that you're dumb. You're making a stupid mistake because you're focused on making money. You're greedy. So why do you want to go through, right? You do not want to go through this, right? When you can just go through this, right? You don't want to go through this. If you have something that you're confident with and you wake up, right? That's all you need. Forget about the entire rest of the day. Forget about the entire rest of the day. Learn to not even look at the market. You get a trade, solid trade. $1,000 is a lot of money. It doesn't even matter what it is. $50, $100, because you're still building good habits. And then when you get to the point where you're, making $1,000, maybe $5,000, maybe $10,000 in a day, the rest of the market doesn't matter. Again, you got to realize as well, trading is meant for us to be free. I want to make I can wake up in the morning and in 5 minutes make $1,000, and then I can go do whatever I want for the entire rest of the day, right? That's the gift of trading. That's why we work so hard, is that freedom, at least in my eyes, right? So learn to take advantage, right? Learn to control yourself when you start seeing this play out, especially at this stage. At this stage, before taking that second loss, when you're up 1,000, you give it back, but you're still up. Say, you know what? I was up 1,000. I just gave half back. I'm still up on the day. I might as well just take it here, right? I'm recognizing that I'm starting to, feel anxious. I want to make that money back. Right when you feel that, you have to recognize that. You have to recognize that. And it takes time. It takes understanding yourself as a person emotionally, right? That takes time. But you have to be able to get to that point when you're able to disconnect yourself from certain situations in certain scenarios, right? Especially when you were talking about P&L during the day, and especially for new traders, right? It's very hard for new traders to handle watching their P&L on a trade and looking at their P&L because they're so attached to the money, right? That's our whole goal here, trying to disattach yourself from the money. Why are you exposing me? What was this mindset shift for you? This is because this isn't even a mindset shift. This is just the correct way to trade. Statistically speaking, this is a more profitable way of trading. If you can recognize the outcome of certain situations and understand, and then take into account how emotions play into those situations, you can calculate what's probable and what's not probable. And what's not probable is you ending the day green when you take a winning trade and then take another trade losing, giving half your profits back. Your percentage of having a green day the rest of that day is significantly lower. You want to know why? It's because emotions come into play. That is what people don't realize. They're like, oh, how does that make sense? I thought it's just trading. Why does the statistics lower of me having a green day when it's red? Because nobody's taking into account psychology. How do you feel when you're here versus when you're here? When you're in that first $1,000 up in the morning stage versus losing half of it in the next stage, it's a completely different feeling for new traders, right? Because the only thing you're focused on is this next stage, is making that money back and then realizing you made a mistake. Being able to recognize you're here and disassociate yourself and, get away from the environment you're putting yourself in, that is when you will succeed. Statistically speaking, being able to stop here. All right, guys. I think that is all I have for you guys tonight. I know we went over a lot of things. Does anybody have any questions? Much love, guys. Much love. Much love, Blair. TJR yelled at me not to trade. Should we still trade? Are you talking about tomorrow? No, we can trade. Again, TJR's following probably couldn't trade news, but tactical traders can definitely trade news. And that's literally no disrespect. Tyler knows that shit too, bro. Tyler, no, we talked about that shit. Because anytime that we do a collaboration stream or a webinar, you can just tell who's from my Discord and who's from his. Again, I'm not here to fucking play games. I'm here to fucking build some beasts. That Zoom in Miami was crazy. The chat was like a Twitch chat. Puerto Rico, Puerto Rico. All right, guys. I'm gonna end the session here. I hope you guys enjoyed this. I love talking about with you guys. I'm very happy about doing this lesson. Enjoy the rest of your night, guys. Get some rest, and I will see you all tomorrow. Peace.